Arjun, you just heard the reporting from Kate. You are an investor in FTX. I guess just walk me through that investment and everything that we're seeing play out in real time and what it means for you as FTX files for bankruptcy.
Sure. It's good to be back on, and thanks for having me. And we're a technology quant firm that invests through venture capital. FTX is one of our exposure, including FTX US, so sort of less than 3% of our overall holdings. But we're not just in exposure into Binance, but I'm on the board of Kraken. The way to think about any of these investments, given that they're private companies, is that a lot of these companies have been growing at high velocity, mostly profitable when you invest in them as well. And so as minority investors, what you're doing is you're taking a sort of conciliatory approach and advisory approach to working with these founders and these companies and these management teams for the long duration. So when we took a look at the company and its financials and its metrics, they were healthy. And again, it was a combination of an offshore entity, FTX.com, as well as FTX US.
So when another investor, Anthony Scaramucci, comes on our air and says he's not going to call it fraud because that's a legal term and that's to be left to the regulators, but basically suggesting that he felt misled. Did you feel misled as well? Were there red flags from your standpoint as all of this, as we've come to this point in time?
No, I mean, I can't speak to Anthony's, perspective of how they do diligence. My perspective is there's a set of investors that look at bottoms-up metrics at a company. And I think we kind of all know who they are. So it's institutional investors, folks like Sequoia, folks like us that are investors in the company. And I think there's always a FOMO crowd of investors that say, like, I got surprised by this. At the time of the investment, there were no red flags. I think you can make the argument that once you make any investment outside of any sort of U.S. regulatory regime, there's always inherent risk, right? Bahamas versus Cayman's, BVI, or even UK and Canada in some cases, there's certain stipulations that become harder. So I do think, like, rule of law, where a company is located, you're taking an inherent risk in making those investments. That said, the balance sheet was healthy. We had audited financials. We looked at the company. They're growing at a very rapid rate. They owned more spot and futures volumes than anyone else in the ecosystem. Not too dissimilar to Binance, which Binance still exists today. So now you have a consortium of more of exchanges where investors are playing in the U.S. and outside the United States. And I think, part of making investments in this ecosystem is to support the ecosystem, but also to figure out who the winners and losers are going to be over time.